Hey guys, welcome to another weekly gold XAU price prediction and analysis video. So in this video, we are going to analyze gold chart on the basis of price action, and we are going to discuss the price action on different time frames, and we are going to discuss the various price action structure that currently gold is following so that we can utilize those levels in upcoming trading sessions. So this is the price action chart, and we have seen that in previous 2-3 weeks, you can see we have seen a gradual decline on the gold chart, and in the previous week we have seen some retracement and some relief for the bulls. So we are going to discuss which levels we have to look for and which levels are important in terms of price action. So we are going to discuss that, but before that we are going to discuss the latest COT report that we generally look every time. So for this week, if we look into the positions of managed money, these are the managed money, or you can say the smart player, the banks, the asset manager. And if we look into the positions of managed money in the gold future chart, you can see this time also they are, if we look over to this column in the change in positions, they are still covering their long positions, and they continuously doing this from last 4 weeks. You can see on this chart from this week 1 2 3 4, and this is the 5th week. So they continuously decreasing their long position, they covering their long positions, and along with that they are adding in the shorts. So you can see they continuously adding into the short. These brown bars is the positions, net positions in the short. So you can read this time the net in the net short positions, they added a good number 12366, and they covered -8061 long positions. So if you remember my previous prediction videos, and if you remember how you can read the COT report, you knows that this is a bearish sign and this is not a good indication for bulls. But one thing that you need to look for is, as you can see, this is the 6-month period chart, and if we look into the previous period from this range to this range, 6-month range, previously you can see this is the lowest you can say the level in the net long positions, and this is currently near to this level. So yes, some decline is still possible, means they can still pull the money from the long, and after that we can expect some bounce. As you can see, this is totally based on the positions. Okay, so this is the, we can say that the net long position is now near to lowest level in the 6-month period. But if we change the range to 1 year, this right over here, you can change it to 1 year. Now if we look into the positions and if we compare the data for the 1 year range, on 1 year, this is the, now this is the position, this is the level where are the net long positions are right now, and in the year range, this is the lowest position right over here. So yes, some down move as per the yearly range is still possible, and we can expect for further decline in the positions of smart player or the managed money. But for the current week, the positions are in the favor of bears because they are not adding into the longs, and they still covering their long positions. So on the price action, we have seen decline and then retracement. In Monday trading session, we have seen that price took support 2 times on the previous week low, and we have seen a good bounce of price. In Wednesday trading session, we have seen, we already discussed this in Telegram channel, that we can expect a good move due to the price action also was in the favor, because the we have we have seen the narrow CPR on the Wednesday trading session, and we have seen a good bounce. But after the Wednesday trading session, the price extended from this trend line, and the next resistance was 1925, and gold bulls, we have seen that gold bulls get exhausted near to the level of 1922, and they not able to test the level of 1925, and price retraced back in the Friday trading session. In Friday trading session, we have seen a good decline during the speech of Fed Powell, and price took support near to this support area, because this support area is a good high volume zone, and we have seen that price, whenever price tried to break out this level, we have seen good rejection. So now this price level, the zone around 1900 to 05 is currently acting as support, and we already discussed this level in the chart in Telegram channel. So now for the intraday levels, what are the levels that we can watch for and we have to take care of? So for the 30-minute chart, this is the 30-minute chart. So the immediate support is the low of the Friday low. So if price is not able to break down this trend line and this low, and if price is going to reject near to the Friday high, then we can expect some range. But if price able to break above, then we can expect some bounce. Okay, so the bounce can only be happen only when price able to break above to this level. Okay, so buying is only possible and only good only when price going to break above to this level, then we can look for buy. But immediate resistance is 1925, which is also a resistance on quarters theory. So better we have to wait it to break out the level of 1925, then we can look for some buying opportunity toward the next resistance, which is around 1935 on Fibonacci level. So buying is possible only if price break above this, then we can look for buy. Okay, and if price break down near to this level, then we can look for the sell opportunity. Also, if we look into the CPR of next day, as you can see, the price is currently closing at the CPR, so it is not favorable to say buy and sell right over here. Either we have to wait it to trade below to CPR, then we can look for sell only, or either we have to wait it to reject from this level. Okay, or for safe sell we have to wait it to break down this low, or wait it. If you want to look only for sell, then we have to watch this level. Under this level we can look for sell. Okay, so this is the scenario on the intraday level. And if we check the chart on the weekly time frame, we have seen continuous decline over to this period, and now this is a good retracement and seems like a engulfing. Okay, we have seen a good bullish candle on weekly, so yes, some push toward the next level on Fibonacci is possible as per the weekly chart. Okay, so overall the scenario is in declining side and the price is in downtrend. So I think we just have to stay with the trend. We do not have to look and we do not have to push ourselves to buy. We have to look how the price is going to behave on the live price action. So we have to wait. Okay, so currently scenario is in not in the bull's favor. We have to look sell opportunity toward the higher price level. But if we see a good bullish candle and we see it on confirmation on weekly, then we can look for buy opportunities toward the higher levels on the weekly time frame, but on intraday levels, this is the 4-hour time frame. Let me show you which levels we have to look for. So on the 4-hour time frame, this is the Fibonacci tool, and these are the support level. Currently this level 1896 1888, this is the support, and the immediate resistance is of course around 192122, this right over here. And on Fibonacci 1924 is a resistance. Above that 1935-238, this zone is a resistance zone. And if price not able to break above to this down move, or you can say if price is not able to break above to the golden zone, this one right over here, the 50% retracement, then better look for the sell opportunity toward the lower level. But if price able to break out, then we can look for the buy opportunities. So these are the levels that we have to take care in next week. And if we check the levels on open interest heat map, these are the level. The current closing price is 1914 on spot price, and on gold future the next resistance of course is 1925-3035. You can see multiple resistance levels in the higher side, and in the lower the most important support level is 1900. And if we check the PCR ratio in case of gold future and option, let me show you. For the nearest expiry, the PCR ratio is showing some bullish sign, it is 0.44, and for the next expiry it is showing some bearish sign. So we have to watch how price going to react, because in next week we have lots of fundamental datas. You can see on Tuesday we have the job openings, job opening data, then ADP non-farm employment change on Wednesday, then initial jobless claim on Thursday. These are the important data that can move the market. And this one, average hourly earnings also on 1st September. Non-farm payroll is a big data, and unemployment rate is also a big data. So next week we have to watch carefully how the price is going to react on the data also. So along with the price action, we have to watch how the price is reacting on the data. So we are going to discuss these data and these levels in live trading session in Telegram channel. So see you there. Thank you.